Let's stay on that BoC decision and get some great perspective now from Frances Donald. She's Global Chief Economist at Manulife Investment Management. Frances, it's always wonderful to have you with us. What was your reaction to the messaging today from Tiff Macklem?
Well, the first thing I do is look for the market reaction. What are the global traders thinking? And what was amazing is how little market reaction we saw in currencies or in the bond market. And that's largely because, I mean, it's really tough to do, but Governor Macklem gave us virtually no information. They conveyed we are still very much in a wait and see. We have our forecast. We think we have a good base case. But at the end of the day, we have to look and see how inflation develops. I still think that this is a central bank that at least wants to convince us they still have a hawkish bias. Whether or not things develop as they expect, which is, slower growth but no recession, remains to be seen. But we didn't get a lot new from Governor Macklem today.
All right, let's chew into two of those factors. Let's just start with the inflation part of the story, Frances. So there did seem to be some color from Tiff Macklem about moving towards 3% inflation this year, maybe getting back towards that target level, I believe, by 2024. When you look at the inflation trends right now, what does the road ahead look like from your vantage point for Canada's economy?
Well, here's the challenge for the Bank of Canada. They have one job, just inflation targeting. So as we head into a period where growth slows materially, but inflation is still somewhat higher than most of us are comfortable with, they're going to have no choice but to really pay attention to the inflation number. Contrast that with the Federal Reserve in the United States, who will be able to look more at the other part of their mandate with his job security. Now, we do have inflation coming down close to 2% by the end of this year. So maybe a more reassuring forecast from us than from the Bank of Canada. But that's not what the Bank of Canada is really going to have problems with by year end. They're going to be facing a situation where inflation is still 2.5% to 3% mid-year, but growth is slowing materially. And how they choose to really address that situation is going to be very challenging. This is not an environment that central banks have had to deal with for many decades, and certainly not one that the Bank of Canada has had to deal with. What do you do when inflation is still too high, but growth is falling really fast?
And you alluded to the fact that there arguably was that hawkish leaning to try to dissuade the market from preparing for at least a rate cut at some point later this year. The governor also perhaps justifying those comments by anticipating that maybe we see some kind of soft landing scenario. You kind of talked a little bit about that area earlier, but what kind of economic roadmap are you anticipating when you look at the data points right now?
We have a recession for this year, Q3, Q4, and there's a lot of focus on, do you have the recession or not recession? I'm not sure that's the point. We have technical definitions for these types of environments. The key story is that growth is going to slow quite a bit. The job market is not going to be as strong as what we've experienced, and we're still going to be experiencing high prices. We can put any label we want on that, John. It's not a great economic environment. The Bank of Canada has said, no, we're going to evade the recession. It's just going to be a shallow dip. I hope that's the case, but we're still contending with a lot of weakness in the housing market, very weak business investment, and a consumer that's still under the weight of these really high prices, particularly in food. So, I think we're still in this period where we have to see just how bad it's going to get, but it's not going to get better from this period forward. That's why the Bank of Canada has said it's time to pause. Now, when it comes to the hawkish bias, though, there's one big problem, which is one of the most effective ways that central banks keep a lid on inflation is through the expectations channel. Governor Macklem wants to make sure that you and I don't think that inflation is going to stay at 4% or above. So maintaining that pressure and reminding us we will respond is really important. I don't think they're going to have the environment that allows them to hike again, but they're definitely not going to abandon this perspective and this push on us to remind us it's still a tool available.
Frances, if we're looking for some data clues which may determine that flexibility that you speak of, let's say over the next 3 to 4 months, what are you going to be watching? Which economic indicators will inform you of what the Bank of Canada can ultimately say, regardless of what it's saying today?
John, it seems like a simple question, but it's actually really tough. And that's because in Canada, we have much less data than we have looking at the rest of the world. And it's very, very live. So if we want to be forward looking and get a sense on where inflation is going to be in the next 6 months, 9 months, or even where the job market is, we probably have to use clues that are happening globally. We're going to watch for global dynamics, including geopolitics, what it's doing to commodity prices. We're going to be looking at the U.S. economy because a lot of the inflation that we're seeing is occurring from global demand and supply areas. So we have to watch that. And I'm going to be watching the U.S. and global job markets. We have a lot more data from global environments. I want to see how those rate hikes are working through those economies. And you'll see that a lot of the data that I'm looking at to figure out what happens in Canada is not actually Canadian data. It's what's happening globally. That's going to be really important because at the end of the day, we are a small, more domestic economy. We're going to be having to look at clues across the entire world to get a sense of what's going to happen for us next.